Hi, this is Professor Arujo with your introduction to Module 3. You'll see Module 3 is posted with the due date listed. If you look at the to-do list, you'll know that Module 3 solely focuses on Chapter 4. Now, in the prior module, you began the bookkeeping cycle. You understood how to analyze transactions. You journaled these entries. You then posted them to the ledger, and then you made sure the ledger was balanced by doing a trial balance. You have to remember all of that as we go into Chapter 4, which is the focus of Module 3. So Chapter 4 begins by giving you an understanding of a couple of the very, very important principles in accounting. Remember, we follow generally accepted accounting principles, or GAAP. So the revenue recognition and expense recognition principles are really critical. It also introduces you again to the periodicity assumption, which you have been introduced to from a prior chapter. But it simply means that, again, artificial time periods are used to measure activity in a business. So the income statement is the very first financial statement, and it runs on the periodicity assumption. It tells you the period of time in which there were revenue, expenses, and a profit or a loss for a month, for a quarter, or for a year. Okay. The other financial statement that also runs on the same assumption is the retained earnings statement. You do the income statement first, the retained earnings statement second. Both of them run on a periodicity assumption. Now, again, it starts off with revenue recognition and expense recognition principles because of a very important fact. The income statement is the very first statement we do. So making sure all the revenue is there and all the expenses are there for that time period is critical, okay? So that's the introduction to this chapter. They introduce you to making sure all the revenue and expenses are there. We have something called adjusting entries, deferrals and accruals. Deferrals are all about objective 2. Accruals are all about objective 3. But these are adjusting entries to make sure that all the revenue and all the expenses are covered in that period of time before we go ahead and close out the books. Now, we close the books on a yearly basis. Again, the longest period of time that we run numbers is for 1 year. Okay. At the end of that year, we need to wrap up those records so we can begin brand new records for the next year. We keep things year to year. That's the longest period that we'll have an income statement or retained earnings statement for. Sorry, I tripped over my words here. So, so we have to make sure we have these down. Once we actually have those down, again, all those are adjusting entries. Entries go in the journal. This is where we go back to Chapter 3. What happens when you put something in the journal? They post to the ledger, which means now the ledger balances have changed after the adjusting entries have been done. And so we now have to make sure that all the new balances in the ledger are balanced. And so we do something called an adjusted trial balance, which you're introduced to in Objective 4A. The adjusted trial balance, once it's balanced, those are your final numbers for your financial statements for the year. So you can put together your final income statement and your final retained earnings statement, because now that all the adjusting entries have been done and everything is balanced, we now know those numbers are solid. And if they're solid for the year, we can go ahead and do our final financial statements, okay? And then Objective 4B talks about accounts that close every year, okay? So there are 3 types of accounts that close every year. Revenue and expenses have to close out at the end of the year, because after we've done our final financial statements for the year, we have to make sure that revenue and expenses are open for the next day to start a new accounting period. right? A new accounting year. And so those balances have to start at zero at the end of every year. And of course, the dividends account, which is on the retained earnings statement, also has to start at zero at the beginning of the next year. And so those are called closing entries. And so objective 4B teaches us how to close the books, okay, using closing entries. And then your exam. Exam number 3 covers only chapter 4 because there's a lot to this chapter. So please study hard. And again, if you need me, I'm around. Give me a holler. Thank you.